Welcome to Getting Real with Real Estate with Danielle Kempf and Jim Kempf, St. Louis's favorite father-daughter real estate team. Your source of real estate information in the greater St. Louis area.
Hey, all right, welcome to the show today.
Hello.
Hello. We are fortunate enough to have Mr. Joe Martin here with the Caffeinated Accountant.
Good morning.
Or
good afternoon. Where are we at?
We don't know exactly. It's either morning or afternoon. Depends on when people
Sure.
are listening.
Fair enough.
Might be
Could
night.
be evening.
Could
Yeah.
be evening.
Hello.
Right? Exactly. Hello. Joe's with the Caffeinated Accountant, the best business name I've ever heard. And we're going to ask Joe a little bit about that here in a second. But as everybody knows,
It's a podcast.
it's a podcast. We got to start off with a joke.
Yes.
So you ready?
I am.
All right.
My financial advisor asked me, what's my net worth? I said, I don't own a net.
Oh, God.
There you go.
That was that might have been the worst one ever. I don't know. That was a bad one, but okay. It was kind of funny, I guess. All right. So anyway, let's get to it. So Joe, the Caffeinated Accountant. Tell us a little bit about yourself and your history, and how. The main thing I want to know is how'd you come up with the name? That's an awesome name.
Oh man. Quick recap on the self is
Okay.
I came from corporate America.
Okay.
Decided that I had to ask too many questions on when I wanted to take off work. I wanted to spend more time with my family and do things that I enjoy during the day.
Awesome.
And so that's how this came about.
Okay.
But the Caffeinated Accountant came from liking to, one, drink coffee, stay caffeinated,
Yeah.
but also working in coffee shops.
Oh, no kidding.
So I work out
Okay.
of the house, but mostly work out of coffee
Oh,
shops.
sure.
Okay.
So Caffeinated Accountant.
So do you have a favorite coffee shop?
I do have coffee. Can I say that here?
Yeah.
All right. I work mostly out of 23 West over in Webster.
Okay.
Oh, okay.
It's my favorite
I
one.
don't know that I've been there.
I've driven
I'll
by. I
have to try
haven't been to
out.
that one.
Where's it
Not
at?
right at Elm and Lockwood.
Oh, sweet. Okay, cool.
Yeah.
That's awesome. All right. Well, we got a good recommendation from another coffee shop. That's fantastic.
Yeah.
All right. So, I guess today we're going to talk a little bit about well, obviously, it's and I know I'm not supposed to date the podcast but we're just a little bit after tax
Taxes,
season is
yeah.
when we're recording. So, have you
That's
recovered yet? Is my question to you.
No, I have not recovered. It seems like an ongoing thing, right? You know, it reminds me of at the end of each year when you try to circle back to everything that you don't want to take care of right at the end of December.
Yeah.
Well, that happens at April 15th.
Yeah.
We'll take care of it after the tax deadline.
Right.
And so now I'm kind of cashing all those checks that I wrote beforehand. But no, this is a big time for us.
Sure it is,
because it's the wound's fresh. You know,
Right.
people are hurt. They've been
Yeah.
damaged throughout the process. Now they want something different.
Yep.
And so for us, this is the best time for new clients to talk about what had happened, and you
Yeah.
still have time during the year to kind of correct.
What are I guess I'm kind of curious as to what are some of the big mistakes that you see people make that hurt them when it comes to tax time? Anything come to mind at the top of your head?
Big things are just not looking at the revenue. A lot of times when you are the business owner or you're getting paid, by 1099, whatever that may be, you're not getting taxes withheld. You spend as if you are getting taxes withheld. Or, maybe you just weren't looking at what that tax liability at the end of the year is going to look like.
Right.
So that's how you get a big surprise there.
Right.
But there's a lot of things you can kind of track as you go through the year that can also help for your tax return as well.
Good. Okay. What kind of things are important as far as that goes?
Across the board, right? So mainly expenses, if you want to keep them in the correct category. Miles are always big.
Yeah.
You're going to look at, as I'm being asked on the spot, kind of.
That's okay.
And different things like that. So, as you're buying things, should we depreciate? Should we amortize
sure.
it? What does that look like?
Yeah.
And all parts of your life. As a business owner, it seems like a lot of what we do can be allocated at least partially to the business.
Right.
Okay.
So tracking expenses anywhere from home.
Home office, things of that nature. Some people do that. Some people
personal
Wi-Fi,
vehicle,
phones.
things like
Yeah.
that.
Yeah. Okay. Gotcha.
Across the board.
Okay. Very cool. Right on. Well, so I guess obviously with us being in the real estate business, when people buy a house, right, there's some changes to their taxes, right? Some pros and probably no cons really, but what kind of benefits do you see from the tax standpoint that benefit folks when they buy their first home that they haven't had before?
Across the board, I would say buying a home, the immediate action you're going to get, one is the interest. Right, so we all know that those first couple years are hard.
Oh yeah, that 1098.
Yeah, those
right? Is that the right form number?
Yeah, exactly.
There you
And
go.
It's great for the itemized deduction. So normally you have the standard deduction. In those first couple of years, you're going to bump right up against that. So that's always good.
Yep.
A couple other things you're going to look at: property taxes. It's going to be big. So if you track those, the state and local taxes, also with your personal property.
Okay.
Depending on if you have a business or not. So if you're just an individual, you're going to have the mortgage interest. You're going to have the property tax deduction. Home buyers, if you're pulling cash out of an IRA, you have I think a limit of about $10,000 you can pull out for a first-time home buyer.
Oh, okay.
Or what the IRS likes to say is like hasn't bought a house in a while type home buyer. So it's like in the last 2 years, you couldn't have owned a home in the last 2 to 3 years.
Oh, is that
Like
right?
that. Yeah, so you can pull out penalty-free, not income tax-free, but penalty-free. Which is
Okay.
Okay.
That's I could see that being a good thing and a bad thing at the same time.
Yeah.
You got to be careful with that, I guess. but
exactly.
it's
I mean,
kinda-
it depending on the market, right? So if you need a little more cash down to sweeten a deal,
Right.
that might
That's
be
a
it.
good way to do it.
Or to be able to get that loan.
Yeah, and
Makes
especially
sense.
in our market where things are still tight inventory-wise, sometimes people have to pay a little bit
Give a
more
little
than
bit
they maybe
more.
want to or expected, and so that's a
Right.
good option for them, I guess.
Exactly. And then you can talk to your financial advisor how that best looks for you.
Okay.
Exactly.
Yeah.
And I guess we probably should have did a really fast disclosure talk, right? We're not giving tax advice, blah blah blah.
Yes,
one of
yeah,
those.
yeah.
We're talking in general. So yeah, if you hire Joe to help you do your taxes the right way, you can't just take all our advice, especially mine.
We're giving
About what
ideas.
we're talking
We're
here.
giving ideas here.
Ideas,
You
not
know,
advice.
Exactly. We're giving ideas. Take these back to your professionals in your own circle and figure it out.
Oh, that's funny.
Awesome.
What else? What? Let's see. I just had a question for you. What are some of the best deductions? You've talked about some of those, but the mortgage interest, I guess, has got to be probably the biggest deduction people can have, in general, right? I mean, maybe having a kid, that's a pretty good deduction, I guess that too. But that you can't buy
Yeah,
them.
pretty good expense.
So, what else? What do you got, Danielle?
Let's see.
Deduction wise, though, I will say, I mean, as just a single home buyer, interest is always going to be big. But as if you're using it for part of a business, that's always going to be big. So depreciation, right?
Okay,
You can
yeah.
use a portion of your home's depreciation, that'd be big. Also, for your home office, like we talked about before, tracking, whatever part of your house that you use 100% for your work, area, that percentage of your home is going to be attributable to those,
Okay,
to your deductions there.
cool.
Con, I would say though, is if you rent, whether it be a home, apartment, whatever it is, at least business-wise, or you would not get that whole rental payment. So you can
Oh, I
only
gotcha.
deduct mortgage interest, not your whole mortgage payment.
I got you.
Okay.
Okay.
Right. So it kind
That
of
makes
goes into
sense.
what you're looking for.
Okay. You talked about some of the things people can start doing now to plan. I guess it's really kind of individualized how people but keeping records has got to be important, right? I mean, you don't just put every receipt in a shoebox and then give it to you at the end of the year, do you? That's not the best way to go, is it?
I try to run from those types of people. You do want to track because
But
it's
it's
always
important, yeah.
it's always I think as people we wait until a deadline really to get
Of
everything
course we do,
together,
yeah.
right?
Yeah.
So you may miss things
Right.
or just kind of estimate because we bump right up against the deadline.
Right.
Tracking it all the way through is going to be biggest. For tax bills, I always say kind of look at your deductions from your checks, whatever you're getting. If you have kids, usually you might bump it up to less withholdings, but maybe that's not the best idea.
Yeah, that's a topic that I was going to ask you about too. So I know, and this I guess is more for W-2 employees because they have their withholding taken out automatically, right? But a
Right.
lot of people want to get that big refund, and so they take less deduction, or they have Uncle Sam take more, right, and hold
Sure.
more. To me, that doesn't sound like the great. Is that a good idea or bad idea? What are your thoughts on that? Because Uncle Sam's holding your money all year, or is it? You think it's the peace of mind that some people are looking for? That I got that big
Sure.
force. What do you see a lot of people do there in that case? Or any thoughts on that from your perspective?
I do have some thoughts. I would rather not pay at the end of the year, so I don't mind giving
Right.
Uncle Sam a little more
Yeah.
periodically throughout the year, so I don't have to write a big check at the end.
Yeah.
Fair.
Now, I have some that don't want to do that, right? They think, or they do. You can do more with your cash between now and the end of the year.
Right.
That might help you,
Right,
So
right.
cash flow is a big issue for a lot of people.
Okay.
So if you have to pay bills between now and
Yeah.
December,
Yeah.
you might have to worry about it later.
Yeah. Okay. I know the quarterly withhold. We're supposed to do quarterly withholdings. We're not so good at that sometimes.
Yeah. Cool, dude. I
So
stand by
sometimes
estimates.
yeah, that's a good idea.
If you don't look at raising withholdings or low withholdings paycheck by paycheck,
Right.
at least look at quarterlies
Yeah.
because that's just based off last year's taxable
Yep.
income
Yep.
or your tax liability. If you think you're going to do better, withhold a little more or not.
Right.
Or think about, can I pay another check for this amount?
Right.
Okay.
Or do I want to?
Yeah.
Or can I find some other
Yeah,
write-offs?
right. What can I do here? What can I buy?
We're talking about tax avoidance, right? Not tax. What's
Tax evasion for
not
tax
evasion.
avoidance.
Right, we're
Yeah.
avoiding
tax avoidance.
taxes. That's legal, right? That's
Yes.
the legal side.
Yeah.
Okay,
Yeah.
cool. I guess relative to real estate again, and you mentioned when we were chatting earlier about investing in real estate property, right?
Sure.
It's obviously a good thing for some folks. I have a few myself, rentals. What are some things there that investors you think need to kind of keep track of, or kind of keep their eye on as they're maybe building a small rental portfolio, or even just dipping their toes into a rental house or two?
Sure. Well, there's some great upsides. At least on the buying side. I don't know about the rental, the operations myself. I'm sure there's some downsides there depending on your tenants.
So I can tell you about a couple of
That's
those.
a different
yeah.
podcast, I think. Yeah. No, I'm the same way, right? So you're going to have the interest, which is going to be big.
Okay.
Then points. If you're buying points to kind of lower that interest rate, those are going to be deductible. So I always say, when I have somebody who has properties, I want to see those statements. I want to see the closing statements to see what it looks like.
Right, okay. Are
Just-
some of the title fees and stuff like that, title insurance, some of those things, are those as far, do you think?
Some of them, it's a case by case
Could be.
basis.
Is it?
So I don't
Okay.
want to say like it's a blanket
Yeah,
statement.
yeah. Okay.
But a lot of times it's for sure going to be
Some of
the points.
Okay, cool.
The pay down the points. For
Yeah,
sure.
yeah. Okay.
Again, you're going to have the property tax, which is going to be big there. Depreciation is where that comes in.
Yeah, that's a big one.
And there you want to track your capital improvements. So if you're buying a house and you got to put some work into it,
Right.
you want to track those big expenses.
Right.
And kind of depending on the amount of the house, kind of ranges if you want to say, well, we want to check everything above $2,500 or something like that.
Right.
Otherwise, it can just go to maintenance and repair.
So are some of the items depreciated at different length of time? Is that kind of, am I right when I say that?
That's a whole nother thing. Yeah, well, I mean, ideally, you can depreciate the whole house as one whole.
Right.
You separate the land and the house value.
Yep,
You can't
okay.
depreciate land.
Right.
But if you improve it, you add money to that basis. So when you
Right.
sell it, you have less of a gain. So that's the idea there. So you pay less capital gains
Okay, gotcha.
if you can value the house more.
So another good reason to keep all the records of those improvements in the house, because that's going to affect your capital gain in the end when you sell it.
Exactly. Yeah. The less of a gain, the less tax you have to pay.
Right,
Yeah.
right.
Okay.
I mean, you can always move on to different tax strategies there. If you want to
Right,
1031 it, which is
yeah.
a whole long
So,
story.
Just can you nutshell that one just a little bit to tell people what that is? Just
Sure.
kind of in a nutshell.
Yeah,
'Cause that's
1031
that's a big
is
benefit.
Yeah, 1031 is
Can be.
huge. It's tax deferred, right? So it's
Right.
you're not saying like I'm not paying taxes on this. You're like I'm not going to pay it yet.
Right.
So if you a whole process to when you're selling a home or a property, whatever it might be, right? You have to kind of name some things. I'm going to trade in this house for this house.
Right,
So you kind of roll it into the next one. So now you're going to just kind of kick the can down the road.
Yeah.
Is like the most layman terms I think I can know about it.
Yeah.
Yep.
And I think you got to buy like a little bit bigger or better, right? A
Yeah.
little bit more money.
Exactly.
and
You're
some
selling
of your
this, and you have to buy another property.
equal or bigger, maybe.
Equal or
something like
bigger,
that,
and you kind of roll that price into it,
Yep.
but you have to name it within 30 or 45 days of
There's a lot
that.
of-
and
I
it's
know
gotta
there's a lot of
close.
detailed rules.
A lot of
Yeah,
moving
yeah,
parts.
yeah.
So I mean, if you do that, make sure you work with a firm that knows what they're doing, because they can really
Right.
screw you.
Right.
Oh,
right.
exactly. Yeah.
Gotcha.
A lot of things can happen. On the other side, what you're saying, at different routes or different amounts of depreciation, if you are a high W-2 earner, then you can start looking into those cost segregation studies, where they pick apart the house in a whole bunch of million different ways, and like some may depreciate over 27 years as a whole house,
Yeah.
or furniture and fixtures might be 5 years, 7
Gotcha.
years,
Yeah,
10
yeah,
years.
yeah, okay.
So for high income earners, that's a good way to buy a rental. And then it has to be rented a certain amount of days.
Yep. So then your depreciation
has to
that
be
year
a-
is higher, right? Which offsets some of your other income, I guess, right?
Right.
Is that how that works?
Exactly.
Fantastic.
Yeah, there's some other
That's nice.
nuances through
Yeah,
there,
yeah.
like a
That's a
short-term
big-
rental
right,
in there
right.
through that. Yeah.
Yeah. Okay. Do you work with folks that do Airbnbs and stuff? Is that
We do.
somebody that you?
Yeah,
You
work a
work
lot
with?
with them.
That's awesome.
And that's big. Actually, for the cost segregation study, there was a doctor who made, between him and his wife, about $1 million in W-2 income. So they paid a lot of taxes. But that was the way to do that, was to buy a new rental home each year, rent it
Yeah.
under a certain amount of days, spend as much time as they can, and they're able to, cost segregate that off.
Yeah. Right.
So they get a huge deduction from that home each year.
That's cool.
Interesting.
I know.
Obviously, that's a simplified
yeah.
version, but
Yeah. I know some of my my losses, I guess, is what they technically are, right? When you write all that up, they're maybe they're paper losses, but they offset a lot of my income sometimes.
Yeah.
Too.
right. Well,
Like
and
I
that's,
probably couldn't finance a cup of coffee right now because of that, but hey, what the heck, right?
that's all right. A loss on paper isn't the worst, as long as you're not trying to buy something.
Right,
Yeah.
exactly. Oh, that's funny stuff. Talk about, here's, I guess, fraud. Like in our business, fraud is huge, right? I mean, people get hacked from title companies. People, they get an email that says, hey, wire so much money. But I hear of things like the IRS called me and they wanted this information. You ever heard of the IRS actually calling anybody?
I have never been called by the IRS, and I wish they would sometimes, because you can get a hold of them a lot faster.
You can't get a
No.
Yeah, I mean, if you call them, it's like
Yeah.
an hour, right?
Right.
Just to talk to somebody.
Normally, most of
But
these
like-
companies or any financial institutions aren't going to call you and ask for any personal information off the bat. So don't fall for that. And they're definitely not going to text you. Which
Right.
I see.
Right.
Every once in a while, I'll get a text from something saying like, "Hey,
It's
you're
IRS.
this lapsed. I need
Yeah.
your information." I'm like, okay.
No.
Yeah, no, not going to happen. You
So-
should see an official letter.
Right.
A professional letter come in through the mail.
Right.
And if you have questions, then you can kind of call them and
Call
check.
them and-
If you ever get anything, an email, a text, or anything like that, I would always call the customer service number of whoever
Yeah.
sent it, just to
Yeah.
double check.
Yeah, for
Because
sure.
there's a lot of fraud. Tax returns are fraud each year, so the earlier you can file, the better.
Is
If
that
the
right?
later you file, there are people out there who try to find people who haven't filed yet, and they'll file for you
Oh, no
to try to
kidding.
get a refund. Yeah.
Oh, wow.
So what happens if someone files for you illegally?
You have to, it's a,
Yes, that sounds
It's a
like
headache.
it's a headache, yeah, because then when you
It
try to
is.
go in, somebody's already done it, and so
Yeah.
now you have to try to prove that it wasn't you, and you have to go through it and kind of see like
Oh, my
what financial ramifications, if any, happened. And
God, what
as
a
you can imagine, the IRS doesn't settle anything very quickly.
No,
So it
yeah,
kind of
that's
screws you
right.
up moving forward, and then if depending if you're looking for a loan or buying a business or anything, you need tax returns,
That could take
right?
years to
So it's
figure
it's a
out.
hassle, and it could tie up a refund that you might have been looking to have as well.
Right. And I imagine that could take a
It'd take a year, yeah. I mean, people
or a year,
people deal
2
with that for a
years,
year or
right.
two, and
Oh
now
my
you
God.
have to use a pen moving forward, to make sure that safety's there.
Right.
Mm-hmm.
Wow. Holy cow.
That's scary.
That is scary. Okay. Man, I had something else I really wanted to ask you, and it just slipped my
Well,
mind.
I didn't mean to scare you.
Yeah, that fraud. You're talking about that. I'm like, oh my God. What else? Did you have anything else?
Also, on the fraud part,
Yeah.
when you're sending stuff to your accountant or to your
Oh.
real estate people, whoever
Yeah.
it may be, just see if there's a secure portal.
Yeah,
There's no
that's-
reason to send your financial information, your
Right.
social security number, anything like that across just an
Right.
unsecured email.
Fair.
Yeah, that's a,
Yeah.
that's a good
It's easy to
idea.
do. I mean, is it safe? Maybe. But, I mean, it's definitely not worth the risk.
People don't think that sometimes because
Yeah.
there's been very, very few times that I can ever remember needing somebody's but maybe like a title company would say, hey, can you get me the last 4 of somebody's social because they had something on title, they were trying to make sure it wasn't that party or something. But,
Sure.
But that, I guess the
Last four
versus,
isn't as bad.
Right.
And it also goes a lot into what I found is what the subject line is. If you say like,
Right,
here's my
right.
personal information or whatever it is, financial documents.
Social security number.
Yeah, right. Yeah. So just, at least be discreet.
For sure. That's awesome. All right. What else?
I don't know.
I think we.
It's good for part 1.
I think we hit pretty much topics there, man. I appreciate everything there, Joe. If you folks, if you need some help getting straight with the IRS, or if you definitely need some help operating your business, getting ready for next year to make sure you and Uncle Sam are on speaking terms, Joe at caffeinatedaccountant.com is the best way to get a hold of you, right?
That's
Joe
right.
at
Joe at
caffeinatedaccountant.com. Joe Martin's the best, so give him a call.
Yep.
And if we can help you buy that first house so that you have something else to write off that Joe can write off for you, give us a call. We'd be glad to help you out.
Exactly.
Uh,
Stay tuned. We're going to come back with a part 2 with Joe.
Yes, absolutely.
All right.
Awesome.
Appreciate it.
Thank you.
You've been listening to Getting Real with Real Estate with the Kemp team. Have questions about real estate or something you'd like to discuss? Contact the Kemp team at 314-336-1926 or visit our Facebook page at facebook.com/the Kemp team. Don't want to miss any episodes? Follow us on your favorite podcast app or YouTube. The Kemp team. Real, honest real estate.